Welcome back to Talking Tokens and another edition of Strata Research, the series where we sit down with our institutional research team to break down one major timely trend across the industry. Last time, Alex and I dug into agentic payments, and today we're staying on the infrastructure theme, but pointing it at the consumer instead with crypto neobanks. These are the apps that are trying to do what Chime and Revolut did a decade ago, except rebuilding it on stablecoin rails. And Alex just published a full playbook on how to actually build one. So if you want to go check that out, we will put it in the show notes. But essentially, let's get into it. Alex, welcome back on. Why now? And what even is a crypto neobank?
Yeah, sure. Thank you for having me. Um, Basically, what a crypto neobank is, it's very similar to like the traditional neobanks that we had in like a decade ago, like SoFi and Revolut and Chime. The only difference is that it uses stablecoins and blockchain on the back end. So the interface is pretty much the same. You know, it offers cards, accounts, trading, yield, but you have the blockchain rails in the back end, which allow for obviously cheaper transactions, better international transactions, cross-border transactions, that sort of thing. Yeah, and they're kind of having a moment right now. So
They're having a moment, exactly. And you laid out 5 revenue lines in it, but I think one of the more interesting points in it is that the mix tells you what kind of business you're really looking at. So can you kind of break that down for us? And what do you see as maybe the single out, the float and yield model as both like the most lucrative and the most fragile angles?
yeah, sure. There's a few angles that neobanks can take depending on like their business and like what product they're trying to make to generate revenue. Um, if they include trading, they might take a little spread on the transactions. If they're focused on payments, they might take a fee for the payments, or if they're doing cross border payments or anything with multiple currencies, they might take a spread there. But I think the most interesting one to look at is the float and yield revenue that they generate. So a lot of neobanks are offering yield through DeFi apps like Aave and Morpho and things like that. Um, it's typically like the highest revenue generating tool for neobanks. The only issue is that like DeFi yields are they're variable. They kind of swing in the market. So in boom times, in a bull market, you might be getting 12-10% APY. But then in the bear, like we see now, Athena USDE is giving you maybe like 3.5%. So they fluctuate a lot. And if your business isn't set up for the bear market, I think it's really hard to build a sustainable product there.
Hmm. Yeah, I agree with that too. And I think the APY conversation is super interesting on the front of like, what is the percentages we're going to get depending on market conditions? Because to your point, yeah, sometimes in a bull market, it is much higher. But I think there's also the conversation of like, you need to know where the yield is coming from,
Mhm.
regardless of market conditions, right? Another thing that you put in the report that I want to talk to you about is that a lot of the founders want to launch the quote crypto bank for everyone. And your report says that's a mistake. So maybe why is that the angle that you're taking? And what do you think the last generation of finance neobanks have taught us that we should not apply here on that front?
Yeah, I think there's actually a little nuance there. So I don't think it's necessarily wrong to launch broad, right? If your product is really revolutionary and like, people are going to use it, then yeah, sure. Like launch it on pretty much every country across the world that you can. And then people will find the best ways to use your neobank or to use your product. But I think that's kind of a tougher angle because you really have to be completely revolutionary, provide something that people haven't done before. And have been working with stablecoins for years now. I think a lot of the revolutionary aspects of stablecoins have kind of been already flushed out. I think it's a much better play at this stage to kind of focus on either a niche market or a niche customer base that hasn't been serviced yet, but would actually benefit from your product. And this is exactly what the neobanks of the last decade have done, right? Like if you look at SoFi, right, they started out as banking for students, right, which didn't have, there wasn't great infrastructure built out around them, or Revolut or Chime, they all do the same thing. So I think it's, if you're building a neobank, a crypto neobank today, I think it's more advantageous to find a market that's pretty small, that has a relatively large TAM for you to attack, but doesn't have a lot of competition, and then you expand from there.
And so then what can be kind of the Achilles heel here? What can kill these companies?
Yeah, I think going back to the yield, obviously DeFi is risky. So if you're inputting or integrating any DeFi products, you have to be aware of the risks, and pick things that you think are more stable. Do your own research. Make sure that you're not integrating flaws or vulnerabilities in your product. Another big thing that we haven't touched on yet is partnerships. So, it takes a lot of time and money to build out a product.
Right.
Neobanks are doing this basically just spinning it up by integrating into already existing products through partnerships. That's also risky. You have to, you're introducing counterparty risk. You need to make sure that your partners are not going to fail. They're going to be around. That they won't change the rules of the contract on you. That sort of thing, and then also just making sure that your revenue model is sturdy enough to survive the bear market.
Yeah. All right, Alex, last thing. People are listening to this, they're learning about crypto neobanks. What are the things they should be paying attention to over the next 12 to 24 months?
I think while we talked a lot about crypto neobanks themselves, I think also a very interesting aspect of this is the picks and shovels, if you will, right? The products that are servicing neobanks. So that would be like either the on off ramps, the DeFi projects, the custodians, or the stablecoin issuers and stablecoin products themselves. I think those are going to be very interesting because they're the ones that are actually integrating and helping to build these neobanks as well. So that'd be my recommendation to look at.
I love it. Amazing. Well, Alex, thank you so much for coming on again. That was another edition of Strata Research. And if there are any themes that our listeners want us to dive into next, let us know.